We have reached the low for 2025. So why are people still on the sidelines? Interest rates are in the 5s to low 6s right now. So they've dramatically come down and they are the lowest they've been all year. So the rate cut for the 17th, it's already built in. That's why interest rates dropped. So it really depends on what the Fed does on the 17th. So we have to let people know interest rates are dropping. Now, what's going to happen? Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. For this show, I'm going to be talking about interest rates. What is going on? We have reached the low for 2025. So why are people still on the sidelines? Why isn't the market moving? What is the Fed going to do? And also, we're going to talk about trigger leads. We're just going to end it once and for all. The bill has finally been signed by the president, and trigger leads are gone. I'm going to explain what that is. So why don't we go into interest rates? Well, the Fed is meeting September 17th. What is going to happen? Well, the CME group, they follow the Fed and they predict what the Fed is going to do. There's a 90% chance that interest rates will be cut by 0.25%, and there's a 10% chance that the cut will be 50 basis points. So right now, the federal fund rate is in between 4.25, 4.5. So if they cut it, it could go down to 4 to 4.25, or if they cut it by a half, it will be 3.75 to 4.25. So nobody knows what's going to happen, but odds are that the Fed is going to start cutting rates. So why are they going to cut rates? Well, the BLS, the Bureau of Labor and Statistics, have come out with job numbers, and there's been some serious revisions with these job numbers. So the jobs are coming in a lot softer than the Federal Reserve thought they were going to be. Now, let's take it one step back. The Fed has a dual mandate. One is maximum employment, making sure everybody is working, and price stabilization, basically fighting inflation. So that's their dual mandate. They believe that inflation is somewhat under control, and the PPI number just came out where there was a reduction in inflation. So on that side of things, that's looking good. But the job numbers, like I said, there's been revisions. They just came out with a revision for April of 2024 to March of 25. They did a look back for the whole year, and they did a revision of 911,000 jobs. So 911,000 less jobs created than what they were saying throughout, and that is on top of all the corrections they made throughout the year, month after month. So one thing is for certain, the BLS is not very good at determining how many jobs are created, because the Fed is saying, hey, we're going to be data sensitive, and if they believe that there's 150,000 to 250,000 jobs being created every month, and then you get these revisions after the fact, well, the interest rates or the federal fund rates aren't being cut. So also, let me just explain the relationship. The federal fund rate is not your interest rate. Your interest rate, if you're getting a 30-year fixed loan, is your 30-year bond, a mortgage-backed security, okay? But typically, what ends up happening with the Fed as they cut rates, the 30-year bonds, they will follow, or even the shorter bonds or the treasuries, they'll sort of follow suit over time. So with the Fed cutting the rates, and there is a strong probability that on September 17th that will happen, the regular 30-year fixed rate has been dropping, and we hit the low. So depending on what kind of loan you're doing, if you're doing an FHA loan, a VA, a conventional loan, and of course, when you're looking at interest rates, it's all predicated on, credit scores, down payment, loan size, and once again, of course, the loan type that you're doing. Well, interest rates are in the 5s to low 6s right now. So they've dramatically come down, and they are the lowest they've been all year. So we have to let people know, hey, interest rates are dropping. Now, what's going to happen? Well, if the Fed on the 17th comes out and surprises everybody and cuts by a half, interest rates will continue to go down. Now, depending on what Chairman Powell ends up saying, if he turns around and states that, hey, we're still not convinced inflation is done. We still believe, the job market is healthy and strong. We did this one cut, but then we're going to see what happens in the future. Well, after the 17th, the interest rates, I believe, will go up, because what the markets do is they try predicting what's going to happen in the future. So the rate cut for the 17th, it's already built in. It's already built in. That's why interest rates dropped. Okay. Now, if we are surprised by the half, hey, interest rates could go down further with it. So it really depends on what the Fed does on the 17th, and then the comments after what Chairman Powell ends up saying on what the mindset, what the Fed is going to be doing moving forward. So it's going to be super, super interesting, what's going to happen. Now, if you're not a gambler, guess what? Interest rates, depending on what kind of loan you do, you could be in the fives, you could be in the low sixes. It could be a great opportunity to lock in your rate, go out, buy a house, do a refinance. Could be a great opportunity for you, because nobody has a crystal ball. Because guess what? If the tonality on the 17th isn't good, interest rates, I believe, will go up. Once again, nobody has a crystal ball, but I believe they will trend back up. They could trend down if they're really bullish on rate cuts. So we will see what is going to happen. Also, the biggie is the mortgage spreads. That is shrinking, and historically, mortgage spreads been somewhere around 1.8. So the 10-year Treasury and the 30-year fixed, there's a spread of about 1.8, and that spread has been shrinking. And with that, in 2023, that spread was up to 3%. Now we're around 220 on that. So hey, there's a little bit of runway for that spread to go down a little bit more and cause interest rates to go down. So it's going to be really fascinating, interesting of what's going to happen moving forward. Now, the last thing, the trigger leads that we mentioned, that was signed into law. No more trigger leads. So what does that mean? If you don't know what a trigger lead is, it's when the credit bureaus sell your information to other mortgage companies saying, hey, this person just applied for a loan. And then you're bombarded with phone calls, text messages from these mortgage companies. And hey, if you got 3 or 4 phone calls, not a big deal. But we're talking about 100 plus a day, phone ringing constantly. So, the general public just had enough of it, and they signed a bill that it's really going to limit who can call you and how many phone calls you can get. So as for in the mortgage industry, we're super happy about that, because it was just crazy. You would have buyers yelling and screaming and saying, this is crazy, I had to turn off my phone, I'm getting a million phone calls, 8 in the morning, 8 o'clock at night, crazy. Well, guess what? That is over and done with. Thank goodness for that. Okay, so big thing that we have to look at. We need to look at the rest of the week. We just have to see where the inflation numbers are going to come in, the employment numbers are going to come in. But right now, it's all trending where the employment numbers are lower than anticipated, and the inflation numbers are coming in lower than anticipated as well. Which inflation is a good thing. So the 17th is going to be D-Day. We're going to find out what goes on, and really where the projection of loans or the trend where they're going to be going as far as interest rates, for your loan, where they're going to be headed. Will they come down a little bit more, or will they start going up? Once again, it just depends what happens on the 17th. So be sure to check that out. Be in tune. If you're following the rates, if you're buying, you're selling, let everybody know that, hey, interest rates are low. Interest rates are low. We're not in the 7s. We're in the high 5s, low 6s. Shout it from the mountaintop, because the market is super soft right now, and there's a lot of people on the sidelines. Well, that's the quick update. That's the Real Estate Show with Pat Lopez. Be sure to follow the show on Facebook, Instagram, and of course YouTube, where we air it, the Real Estate Show with Pat Lopez on YouTube. Leave some comments, really helps the algorithm with likes, and be sure to let me know some show topics in the future. Remember, the show's everything real estate, no limits. Hope you enjoy the show, and I'll see you